All right, guys, back to work. Weekend is over. Short week ahead of us. Thanksgiving on Thursday. No time to waste this week. Let's make some money and jump right into it. On the 60-minute time frames here in the Nasdaq and the E-mini, you can definitely see we're bullish across the board on both the E-mini SPY, the Nasdaq, and the triple Qs. But the two most important clues we have into tomorrow, Tuesday trading session, first one is this trading range. You'll see those big, juicy ranges on the S&P and the Nasdaq. The second big clue are these levels of resistance you're seeing us running into right now on these 60 minutes. When you combine a range and a breakout into overhead levels of resistance, there is plenty of ways to make money tomorrow. I got some breakout pullbacks on my radar. If we're lucky, maybe some reversals during that breakout pullback. Got some long side trades, some short side trades, and as we always do in these videos, I'm going to break this down to my favorite trades for tomorrow when you guys have a game plan to make some money on Tuesday. And before we jump in, though, I want to talk about entry tactics. We'll drill down to the charts tonight. Before we do that, though, let's double check our schedule for tomorrow. There are kind of three main things you want to be aware of for tomorrow. First thing, of course, is the home sales number coming out at 10 o'clock Eastern time. That is the big news of the morning tomorrow morning. FOMC meeting minutes, the notes from the last FOMC announcement, they'll be coming out at 2 o'clock Eastern time tomorrow afternoon. And you may not be aware of this, but tomorrow evening after the closing bell, we're going to finish off earnings season. I know this seems like, wait, earnings season? I thought we were out of the way on that. We were, but they apparently saved NVIDIA all the way to the end. They'll be reporting big NVIDIA earnings coming out tomorrow night after the close. So just be careful tomorrow afternoon with that FOMC announcement or the minutes tomorrow at 2 p.m. Eastern time. And you got to think right now as we go into Thanksgiving, tomorrow's a very, very crucial day for a lot of traders. And with that big number tomorrow night, we'll definitely look forward to some big trades tomorrow morning in our trade room. So 10 o'clock Eastern time, 2 p.m. Eastern time tomorrow for FOMC minutes. And how will those NVIDIA earnings come out? Everyone's racing right now for the AI race right now. We saw the big headlines out of OpenAI, Sam Altman, Microsoft scooping him up over the weekend. So a lot of stuff going on in that niche, and we'll be keeping track of that tomorrow. Let's get back to our charts, though, because, of course, it's good to know when the news is tomorrow, but we all know by now the money is made on the charts. Let's now go over my favorite trades here. We'll go the S&P SPY first. We'll finish up tonight on the Nasdaq and the triple Qs. Like I mentioned earlier, there really is kind of two big clues right now. We're pretty bullish overall. You can see that already. The range, the level of resistance. Whenever we have a range breakout like this, we look for breakout pullbacks. And with this being such a big level of resistance, could that breakout pullback fail and turn into a complete reversal for tomorrow? We'll talk about how to tell the difference on that, how to trade that here tonight. Breakout pullbacks are the name of the game here in a situation like this. Let's now drill down to our faster time frames, our tick charts. I use tick charts quite a bit in our morning trade room. I think tick charts make everything easier. This is 7,000 tick chart you'll see there in the upper left-hand corner. And that, my friends, is the 21 EMA, if you're tuning in and watching here for the first time. Now, the tick charts pretty much tell us everything that we need right now. We know we have that trading range. We see that big breakout, and of course, we're running right into major resistance. It is pretty much the same thing on the Nasdaq and the triple Qs. Whenever we see a range breakout like this, we always look for a breakout pullback. We basically use what was resistance as support, and we look for breakout pullbacks off the high of that trading range. So right now, we have to assume that buyers are waiting for that pullback and that retest of that high. Now, there are lots and lots of ways we can make money during that breakout pullback. For example, on the way lower, I'd like to use what I call a crown reversal to short this thing as we get that pullback. Now remember, crown reversals, it's a lower low in price, and what I call a bull trap, right, coming in off of that high, lower low in price, and that trap above that high. We talk about crown reversals a lot in our free video classes. Once we get that deep pullback, I then like to go in and rope in some of the sellers and see if I can't use what I call a failure pattern. This will be a 2-try failure. Let those bears try it once, try twice. The goal of a failure pattern is to basically harness the stops of those sellers and use those stops to fuel that move back up to retest that high. I call those failure patterns. And then as we're going higher, there's one type of entry I always look for. We know where the market wants to get to, right? The market wants to go back and retest that high on that breakout pullback scenario. This one basic entry pattern look for before I go back to retest the high. And that's always going to be a bear trap on the way back to retest the high. It's a higher high in price. It's a trap below that low. One of my favorite trades is the double top reversal. Remember, the situation right now is it's a breakout. It's a breakout pullback. We know the buyers that want to buy nice and low. If we can get those buyers in, if I can get in on that 2-try failure pattern, where would my profit target be? Targets will be right back up to retest the highs. Hopefully we can get some rookies coming in at those highs, and I call these double top reversals. Let the buyers try up here. Buyers try once, buyers try twice. These are rookies who are buying up here, right? Professionals are buying nice and low. Once those rookies try once, try twice. The same idea here for a 1-2 for the bears. Same idea up here, 1-2 for the bulls. And I love these double top reversals after a big move up. Target on this is right back down to retest that low. So once again, these are very simple, very straightforward. These are breakouts of ranges. Think about that breakout pullback. As we go up into resistance, I start to wait for buyers to chase after it, trap those buyers in what we call a crown reversal on the short back down again. As we get that pullback, remember off the top of that previous range, we now use that 2-try failure, trap the bears in, stops as fuel on the way higher. Before we run back up to take out that high, it's a bear trap. And then speaking of traps, a 2-try failure. Let's see if those rookies jump in and chase after it. 1 try for the buyers, 2 try for the buyers, and then short that sucker back down to retest the low. Now, if you're watching for the first time right now, this might be a brand new language for you. Crown reversals, bear traps, failure patterns. But don't you worry, I got you covered. I teach all of these entry patterns, and I have a ton of examples of these setups inside of our free classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link that popped up there. Take that free video course, because the strategy you'll learn in that short video series will teach you a simple trick we use in our morning trade room to know exactly where the best winning trades are going to be each day. And more importantly, as part of that free video course, I'll teach you 4 of my favorite entry patterns, help kickstart you making money on your own. Bottom line, the markets are way too good right now not to be making great money, consistent money. If you're tired of missing the best trades, hit that link up top there. Grab that free video course. It'll give you an easy roadmap to follow and get you moving in the right direction. Also, too, if you can't grab a link up top there for some reason, I'll put all the important links you guys need then in the description of the YouTube video. I'll put the free video course links, our trade room membership links, and also, too, I post a lot on Twitter throughout the day, throughout the week. If you're on Twitter, give me a follow. I'll put my Twitter handle down in the description there as well. So grab that link. Hundreds of examples of how we apply things like crown reversals, failure patterns, and everything we talked about here so far is included in that free video course. Now, I want to talk about maybe 2 more variations of this. So oftentimes what happens is we'll get that nice deep pullback. Remember I said earlier, we're into a lot of resistance. So how would you know if the market now reverses, right? How would I trade that reversal going back down into that trading range? It's pretty simple. What I would do is look for that crown reversal, again, lower low in price, and that bull trap above the high. The crown reversal is definitely on my radar, but as we pull back, Okay, this is where you'll know what to do next. What usually happens is we'll run into the top of that trading range. The bears will come out. They'll try a couple times. We can squeeze those bears for a run back up to retest the high, right? We talked about that here a few moments ago. However, if they begin to grind down and grind and grind and grind, if we pop lower and we grind down, we know where the market wants to go. It wants to go back into that trading range because, as you guys are learning in our free video classes, we know that ranges act like magnets, right? So if we end up punching lower and we start grinding down like this, this is a lot of bearish momentum. Obviously, bears held that major resistance. Buyers couldn't hold it. How do you trade it this situation, though? How do you trade that environment? It's pretty simple. I'm going to draw a trend line off those lows, okay? Mark them right down off those lows like that. I'm going to bring that trend line up top and make a channel, okay? See how I draw this? You anchor off those lower lows, bring it up around those big highs. Now, here's the trick. Look left and look for prior swing highs. And I'm telling you right now, this is usually where the easy, consistent money is made in these situations, right? Now, in this example, I'm showing you what I would call a bull trap. It's above a prior swing around that channel. Sometimes, though, what happens is it will really bounce hard off that area. It'll get underneath or above the moving average and make usually call a failure into a pullback combination going lower. The bottom line is, don't worry so much about the entry pattern right now. We'll know more about the specific entry tomorrow morning in the trade room at 8 o'clock Eastern time. What I want you to be aware of, though, is that if we roll over and begin to grind down like this, all of that momentum, it's almost a guarantee we're going to roll over and take out that low. It's just a matter of finding that new channel off the lows, pin them up around the highs like that. And then again, I'll take whatever entry pattern I can get here, right, to short on that, what I call the first test, right? The first test of that channel. We draw the channel down, we're bringing up the highs, right? That is the first test of the high of that channel. So if this thing collapses and runs back down, now you have a really good idea now, or at least a game plan here. Whatever you do, don't chase it running lower, because what happens is as it drops and keeps on grinding down, eventually anybody who sold short up here, they're taking their profit back around that channel or on that range. You want to short it right on the pop back up and put that target back down to retest that low. All right, guys? Now, what if we go sideways here tomorrow? You know, big move up. This could easily be a sideways range for tomorrow as well. We got big NVIDIA earnings tomorrow night. We got FOMC minutes tomorrow afternoon. How do we trade this if all we get is some sideways chop? Let's talk now on the NASDAQ here. NASDAQ seems a little bit more likely to give us that sideways chop tomorrow because, of course, NVIDIA is a big part of the NASDAQ index. On the NQ right now, or the triple Qs on the 60-minute time frame, once again, we know we're pretty bullish overall. There's no doubt about that. That trading range, along with that breakout into lots of overhead resistance on the 60-minute chart, it gives us a very similar game plan we talked about earlier on the S&P. In fact, everything on the S&P can pretty much be applied directly to the NASDAQ. The one very small difference, though, I would say on the NASDAQ is the size of this move higher on the NASDAQ is quite large, right? It's quite big move as we went higher. Now, if you're a student of mine, you know that anytime we see a really big move in one day, we usually get a two-legged pullback the following day. Now, when I say two-legged pullback, if you're taking my free video course right now, I talk a lot about measured moves, right? As in A, B, C, D. We saw this last week, if you recall. If you watch the videos last week, and that two-legged pullback will usually be a little bit more than a measured move. So think about that 100% extension off the highs. It will usually go, $1.25, $1.30, right? $1.50%, right, off of that high. It wants to be a little more than that 100% extension. So that's kind of where my head is at right now on the NASDAQ. Same basic idea, right? We're looking for that breakout pullback. There is your trading range you can see here on the NQ. The one big difference, though, is there's a very much bigger, right? A very bigger breakout pullback in the NASDAQ than we saw on the S&P because of that sheer space, right, between the S&P and the Nasdaq like this. Again, the S&P simply was not as big of a breakout. It's more likely on the S&P to pull all the way back to the top of that range. This one not as likely unless the bottom falls out of it and we get that big pop and grind move going lower. So I point that out because in these situations, we may not get that deep pullback all the way to the top of that range. It may only be again, think about a measured move, 125, 130% right off that high. That's usually where that pullback will be coming in. We'll know more about that, of course, tomorrow. But same basic idea, right? It's that crown reversal off the high. And just so you know, I usually go half size or quarter size entries on reversal trades, right? So, go full size position, or at least I will full size position, right, on a pullback. But we try to pick the tops like this, right, on these crown reversals. I'll usually go half size, quarter size, third size, right, than I normally would because of that picking that top, right, that lower low, that trap low. And then again, you want that 1, 2, think about a measured move, a little bit more than that, right? That's that two-legged pullback. Rope those bears in once, twice, that failure. And then as we go higher, right, it was that bear trap below that low. This is nothing different. Same idea we talked about earlier on the S&P, and then again that 1, 2, that double top reversal back off the high. We might see all these. We might see one or two of them, but at least we have a game plan ready for it. Crown reversal, 2-try failure, bear trap, and that 2-try failure off the high. Let's talk about and again, right? If it drops and begins to roll going lower, now you know what's happening. Now mark that low, mark that high. Short that bounce and back down to retest that low. We'll look for one of those double bottom reversals to buy off of that low. And again, I have a lot more examples of these inside of that free video course. Let's talk of ranges though, right? Because if there's one market that may go sideways for tomorrow, this is certainly going to be it here. Range-bound markets are magnets, right? They're balanced markets. So when I think about a range here, and again, this may not be the exact range we get for tomorrow, but think about a range here starting to develop ahead of that NVIDIA earnings tomorrow afternoon. What you need to remember about ranges is they love to rotate. So we know we have this big move up. We know we're looking for that two-legged pullback somewhere down here, right? And that move back up again. If we go sideways, that doesn't really change very much. The key to a range is once that trading range, find levels of support underneath the range. And again, we'll know more about the two-legged pullback once we see more information here tomorrow morning. But find those key levels of support below the range. And the key is wait for a breakout and use what I call a failure into pullback combination. These are very simple. You guys are learning these in the free video course. But once I see that break down, we're into support levels now. That range is a magnet. Wait for that pullback. Let the sellers try to short this thing. And when they do, now you've got them right where you want them. Now you've got their stops sitting right there, easy to light up those stops for a run going higher. Now, in our trade room and, of course, in our free video course, we talk a lot about this failure into pullback combination, which looks basically like this. There's always variations of this stuff, so we'll do more tomorrow, but kind of the basic idea is a failure into pullback. It's basically a seller failure pattern below the moving average, then into that first pullback off the 21 EMA, right? 21 EMA on all of these charts. The goal of this, remember, ranges love to rotate. The goal of this is to rotate to the other side of that trading range. And then remember, the pendulum swing is where this thing wants to go. So the amount we go below the range, I can then project that amount above the range. These will be equal, of course, right, in reality. And the goal is to hold on to that position until we take out that pendulum swing level on the other side of that trading range. This is usually where the easiest money is made if we go sideways. And again, this could be the Nasdaq, it could be the S&P. It doesn't really matter, right, which market. I want to make sure you guys, and myself included, have a game plan so we're prepared for this here for tomorrow. So, big move up, strong move up. We may not get that deep pullback right away with that big NVIDIA earnings tomorrow afternoon. It may wind up going sideways. If it does go sideways, focus on failed breakouts. breakouts, right? We call these fading the breakouts. So trade against breakouts, failure into pullback combo. And remember, when in a bull market like this, hold those trades, right? Other side of that range, and try to leave a runner up to that pendulum swing. One of the easiest ways to make more money is to get better at staying patient and letting your trades play out. One thing we do a lot of work with in our morning trade with members is to make sure we stick with the game plan, let those trades work for us. We spend so much time each week looking for trades and finding good entries. We might as well wait and let the trades play out along the way. One variation of this that I want you guys to keep in mind on this would be a double bottom. This could also go along with the game plan we mentioned earlier. Every once in a while, what happens is we see these big kind of breakdowns like this. The underbelly of that range will hold as resistance, and they'll try to make another leg going lower. Again, we mentioned earlier, it's a pretty big move higher, so it wouldn't totally surprise me if we try to pull back even further to attract more buyers in for that run going higher. We see a lot of these in our morning trade. And what we'll do is we'll grab that failure, right? That one, right? Grab that failure going higher. But then as we're going back up into that trading range, it'll roll over and try again on this. These will oftentimes be measured moves, right? Or a 1, 2, 3 move, two-legged pullback going lower. Once we take out that low again, we'll do it again. 1, 2, that failure into that pullback combination, right? So just going to keep in mind on that too. These are like a double bottom reversal there. We talked about double top reversals on the S&P. I just want to make sure you know though that if we do wind up right getting a strong leg down, we get that failure going higher. We oftentimes will take that first 1-to-1 target. They hold the underbelly of that trading range. They roll over. They take out that low. It's still a very bull market at that point. Now we're at a much better location to be a buyer. Momentum in this case, there'll be a lot more bearish in the short term. So then we come out, we trap the bears in, use that 2-try failure again, right? And then look for that failure into that pullback combo and back up from there. And again, I apologize. I'm kind of scribbling in the chart here right now, but the goal here is to trap those bears in with a failure pattern. If they roll over and take out that low, it becomes a 2-try failure, and that may wind up being the best breakout pullback, if you will, there for tomorrow as well. The other variation of this, of course, there are lots of variations we see every day in our trade room. I could have covered the most important ones here for you guys on these videos. The other variation of this would be one of my favorite trades, which would be if we go into a trading range and we get that fake out breakout. Now, we're bullish overall, right? But again, into resistance overhead. Now, what will happen a lot of times in these situations is they'll pull back and they'll keep going. If they pull back and keep going, now we look for that breakout pullback pattern I talked about earlier on the E-mini S&P chart, right, a few moments ago. However, if they pop up and they start pulling back and the buyers try once to keep going higher, try twice to keep going higher, if I see that lower low in price and that bull trap off the high, that is that crown reversal pattern we talked about a few moments ago towards the beginning of this video. Does that make sense, right? So if we go sideways overnight into resistance, everybody wants that deep pullback right now, right? Everybody wants to buy nice and low. So if we end up pushing, if we go through the range here, right? We break out higher and they keep going, right? They keep going. Okay, that's a good breakout. Now we can go out and find that breakout pullback we mentioned earlier on in the video, right? Breakout pullback, pretty easy. However, after such a big move up today, it will be, well, we gotta wait and see what happens tomorrow. But if we start seeing these buyers come out and try to keep it going, they try once, they try twice, all those buyers, they're buying high, they're buying right into major resistance on the 60-minute. All of their stops will be sitting right below that low. I love the idea of 1 try for the buyers, lower low in price, 2 try for the buyers, and there's that crown reversal. Now, where does the market want to go at that point? It wants to take out the other side of that trading range, and what else? It wants to complete a pendulum swing on the way back down again. Easy targets as we rotate off the high. And then what do you think down here? Who's waiting down there? Buyers, right? Absolutely, buyers are waiting down there. Where do we get in? We wait for the price to pull back. We let those bears try a couple times. At this point, it'll be pretty bearish as it rotates off that high. And we look for that same failure into pullback combination. In this example, though, guys, make sure, though, we complete that pendulum swing first. Okay, and also, too, again, when we roll off the highs like that, that becomes a very bearish momentum market. It'll be a 2-try failure in that situation because of that shift momentum as you rotate off the high. But same basic idea, right? It's a bull market. I want to buy at support levels below the range. And you know me, I'm not a big fan of picking bottoms on pullbacks. I'd rather use my failure patterns to time the perfect entry, use stops as fuel, and try to get that run back up into that trading range. All right, now our game plan is all set here for tomorrow. As always, though, I do my best to game plan tonight, but tomorrow we'll trade this stuff together tomorrow morning in our trade room. I can't think of any better place to learn and trade along than every morning, 8 o'clock Eastern time, with all the members in the SOT trade room. I'll put all the important links you guys need, the free class links, the trade room membership links. I'll put my Twitter feed down there, all the important stuff you guys need in the description of the YouTube video. If you're here for the first time tonight, I would definitely recommend, though, grab that free video course, learn the basic strategy, get the wind at your back, get momentum moving in your favor, and soon I'll see you sometime soon ready to go with us in the morning trade room. Any questions, any concerns, any issues getting access to our free video classes, you can always call the office or use live chat. If you have questions, if you need help getting access to this stuff, definitely don't be a stranger. I'll be here to help out every step of the process. On that note, wrap things up here for tonight. A short week here. Let's make some money tomorrow before Thanksgiving, turkey and stuffing on Thursday and Friday. The game plan's ready. Hopefully I'll see you tomorrow morning, 8 o'clock Eastern time in the members trade room. If not, same time, same place, back tomorrow night. We'll do it all again. As always, my name is Joseph. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.